Good afternoon, Cathy. How you doing?
I'm doing terrific. Terrific, Ryan. Thank you for this opportunity. I appreciate it.
Yeah, I'm looking forward to your story because I think it's a very good one. And I got introduced to you through Chris Yates in the Rhodium community, and I think we've had quite a few of them on here, and we've got a really interesting story that I think you're going to be able to share with us because a lot of our listeners do not have a lot of exposure into the IPO world. But before we really dive into that, can you go back and, for our listeners' sake, explain to us the day that you decided to be an entrepreneur and then how did that unfold?
Oh, wow. I remember the day quite clearly. It was a day. I had worked for a long time, as you know, Ryan, for Microsoft, and then I went on to work for IBM. And while I was with both of those organizations, it was highly entrepreneurial. At Microsoft, I was their second employee in Western Canada. We didn't even have an office. I was working on the coffee table of my manager who managed Western Canada, and it was kind of funny because I had to make sure that he was out of the shower ready to go before I went into his home to work. But it was wonderful. It was so entrepreneurial. I loved it. And even within IBM, I found myself gravitating towards entrepreneurial pursuits. I got internal funding for a large multimedia center, and we basically built that from the ground up within this larger organization. So it became really obvious to me that I was a dyed-in-the-wool entrepreneur, and I really needed to do that. So the day that I started this business that I eventually listed on the stock exchange was very momentous. And I remember talking to my business partner, and he had an opportunity, an idea. I'll spare you the technical details. He was the geek of the outfit, Ryan. Now, in my world, geek is a term of endearment.
Well, because we both have got the IT background too, so we'll
Yeah.
spare all of the listeners the some of the technical stuff. But I think kind of explain a little bit about it because it's some pretty cool stuff that you guys were doing.
Yeah, well, without getting into, I mean, I'm a marketer, not so much on the technical side. I can figure out how to push a few buttons. But my business partner, who was the technical brains of the outfit, had this idea, and I'll just give you a real brief explanation for it. And at the time, it was very difficult for companies, large organizations with distributed offices worldwide, to connect their internal email systems to the internet. It was difficult and it was expensive. And so he came up with this strategy of basically backhauling all of that work into a central location. It required a very expensive computer. And I went, wow, this sounds like there's a real opportunity here. I'll go and talk to a few people who might purchase it. And if it looks like it has legs, I'm in. And I went and talked to half a dozen potential clients, which is the way you're supposed to do this, right? Talked to half a dozen clients, and they said, without exception, if you build this thing, we will buy it. So I went back to my business partner and I said, that's it. Let's do it. And we scraped together $10,000, which was all we had at the time. And he spent it on a single computer. All of it, the entire 10,000. They were a lot more expensive back then, but we needed, something really powerful. And then we were broke. Not
Now
an
what?
auspicious start, right? Now what? So we had, a few clients lined up, but it was a recurring revenue model, relatively small monthly billing that we were hoping to build over time. And when you're in the high tech business, you know this, Ryan, I'm sure, you need to grow very quickly. And it's very difficult to do that without financing. And also, one of the things you come up with pretty quickly is the landscape changes very fast. I mean, you have to be light on your feet. And we were in some ways just slightly ahead of our time, which is not a good place to be if you don't have enough money to grow quickly. And so basically that's when we started going out and looking for financing. So I did a few rounds of private financing, and the exit strategy for those people who were helping to finance the company and eventually for ourselves too was an IPO. So that's how that came about.
I love it. There's so many different dovetails that I want to go into. So let's start with kind of at the beginning where you're this recurring revenue model that you're referring to, because so you bought the $10,000 computer, when you scraped all the money together, what was the business plan? Like, how did you project out what you guys wanted to accomplish? Did you fall into the recurring revenue model, or was it specific and intentional?
It was very specific and very intentional. Both my business partner and I had been, quite successful working in other organizations or doing consulting, and that's a pretty tough way to grow a business, especially if you want to exit at some point, right? Separate the business from yourself. So right from the get-go, right from the very day we opened our doors, it was based on a monthly recurring billing. And I remember our very first client, when I quoted him the monthly price for the number of users that he had, he said, can I pay for a whole year up front? And I went, and inside I went, oh, I don't know how we're going to do that. But to him, I went, absolutely. We'll figure that one out. Absolutely.
I will go find a place you can wire the money.
Yes. And so when we started to scan around for potential partners and investors, we had a revenue stream already set up. It wasn't huge, but we had some gold-plated clients as far as the recognizable customer names, and they could see our revenue each and every month. So we knew how much money we had coming in this month. We knew the next month it was going to be similar. Now, if we didn't build, we might have had a few customers leave, obviously. But it's very easy when you do that, especially for an investor. It's very easy for them to project out. And if we had more money to do more, offer more services and to do more marketing and bring in a sales team, then it was a relatively, a curved line, like a hockey stick, in projecting our revenues out. And from an investor's perspective, the proof was already there. People were already paying monthly, and it was just a matter of growing those numbers.
So what were you billing the monthly services to? So were you selling hardware? Were you selling like monitoring services, or exactly what was the services that they were paying monthly for?
Well, the equivalent in today's world, in today's language, would be, it was like software as a service. And so, again, without getting into all the technical details and going down rabbit holes here, basically what we did was we provided an off-site gateway that would translate their internal email, which was in a proprietary system, to internet email. So we were the gateway for that. And we handled all of the technical requirements to get the email from their internal systems out to the internet, and from the internet back into their internal systems. But we ran it all centrally, and we charged them a monthly fee per email user, so per email address. So a relatively small fee if it was a small law firm with 20 employees, and a larger monthly fee if it was a large organization such as Interwest that has ski resorts all over the world. Then we would charge them a larger monthly fee. They loved it because it meant they didn't have to handle any of that complexity, any of the technology. It just worked. And we just bought bigger and bigger servers.
So were you that you wouldn't have to sell them boxes or anything like that? Was it software that you were putting on that gateway, or was it actually equipment that you were financing? I'm just kind of curious how you're.
No, it was software. It was software on the gateway. So all we had to do was set them up, set up their access in the gateway. We charged them a one-time setup fee for that, and then they just became, one of the services on that gateway.
Yep, I love it because I mean you were way ahead of your time on the recurring software as a service, and everybody's doing that today. Everybody's got monthly subscriptions that they're probably sick of. But did you have any challenges trying to sell it like that?
Not so much with the customers. They loved it, and they loved it because it was a dramatic reduction in their costs, and we could spread our costs out across many customers, and so it worked quite well for them. Where we did run into challenges at that time was when we wanted to add other components, other services that required our suppliers to get on board with monthly recurring billing. They're like, we don't do that. We sell software in a box. That's right. You want 100 users, you got to buy 100 boxes. And we're like, oh, this is a bit of a challenge. So as I said, it's challenging to be just slightly ahead of your time, especially if you don't have, the financial legs underneath you to support you. But once we got going on this, it was there were a lot of people trying to figure out what we were how we were doing what we were doing.
So when did you start to feel the squeeze for the lack of capital? I mean, because the beauty of monthly recurring, like you had said, is you're building this cash flow platform. What were some, like, how long into the business did you start to feel the squeeze, and what was it that you were trying to accomplish that you knew that you needed to go out and look for outside sources?
We started to feel it almost immediately because, as I said, my partner bought one computer, but obviously we needed business computers,
Mm-hmm.
but we also needed backup systems. And one of the things that we needed to do was to have a completely off-site backup to protect our business and to protect our clients' services that we were offering them. And so, one of the things we did was we parked a server at IBM on the other side of the country. And they charge us monthly for that. So that worked out well. But we felt it immediately. The other thing we needed to be able to do was marketing and sales. Nothing in this world is if you build it, they will come.
Isn't that the truth?
Nothing. And so that costs money and that takes staff. And so we felt the cash crunch pretty much immediately.
Did you know going into this that you were going to need to look for capital right away?
Yes. We did. But we also knew that it was going to be much easier to raise capital, and we were going to have to pay a much lower price for that capital in terms of share of the company or whatever it is if we had a proven recurring revenue model. So we wanted to build that first.
I love it because, it's building it to sell it, but then it's also building it to get investors, which you have to go through the entire kind of valuation, which I want to kind of dive into. But, so let's kind of take this in steps. So if as you're going out and now you've got something that you feel confident that you can take to investors, did you have, what kind of investors were you looking for? Was it angel investors, private investors, VC funds? Like where did you go with this intention? Because you had a lot of intention. Where did you just start to explore?
Well, that's a very good question. And I think I have an interesting answer that some people might not have thought of. And I didn't have a lot of, I handled the business side of the business, the finance, the admin, the sales, the marketing. My business partner handled all the technical pieces, all the techies, techie again, the term of endearment, but I don't get them. They don't get me, So we kept those parts of the business quite separate, which was great. But what happened was I didn't have a lot of experience in dealing with angel investors or dealing with underwriters or dealing with brokerage firms. I just didn't, right? Mm-hmm. And my partner and I had this saying, and that is that when you're swimming with sharks, we were getting into the water, right? When you're swimming with sharks, bring a shark with you. Mm-hmm. So what we did was we sold a large chunk of the company to one angel investor who had a very specific job. And his job was to finance the company. His job was to find financiers and put us on that path to being public and raise more money. So he was very well connected. Now, the good news was he didn't understand much about the technology we were dealing with. He didn't understand that much about what we were trying to accomplish as a business. And I kind of liked that.
That's crazy. Right? So how did you find him? And then why was he comfortable with the fact that he didn't know much about the business?
Well, interesting. He looked at the numbers. He could see where we were going. He could see that there was a market opportunity for certain, but also, as I mentioned, we got busy building proof of the recurring revenue stream, and we did it with gold-plated clientele. So, and by that I mean highly recognized names. And so when he saw our list of customers and our recurring revenue, basically that was all he needed to know. He didn't need to understand why they were buying what they bought. He understood it in general terms. But he didn't know enough about it to be able to drive the technical direction of the company, or quite honestly, to interfere with the technical direction of the company. So, we told him very often when we first brought him in is that you've spent a lot of money to buy yourself a job. Mm-hmm. And he would laugh, but that was the setup. He was the one who was to bring us to the next steps in our financing. How did we find him? We started talking to a couple of our lawyers, asking them for recommendations, asking them for a strategy. And, that's eventually how we came to know him.
So what was his background? I'm just curious. Was it private money? Did he make it somewhere else? Was he in the business of doing that and raising capital?
Yes.
Okay.
Yeah. That was his business, right? He was an angel investor, and some of his, properties eventually went public, and some didn't, right? Mm-hmm. Some were privately. But yes, he was looking for his next 10 bagger, as they like.
So hopefully you being that one. So let's go into how did you, because I've had this conversation with a couple other people on the show, and the difference between a valuation of a 20-year business that's got consistent 3% growth in EBITDA and customer, that's way different than valuing a startup. So how did you guys go about, or maybe you'll say the recurring revenue did it, but how did you guys go about valuing the business for this individual and then understanding exactly how much to give him?
Oh, well, that's always a guessing game. And it's very easy in hindsight to go back and say, well, we gave away too much. I think, that's what a lot of us feel. There's a little bit of seller's remorse, if you will. But taking a look at it, I mean, we really needed his skills, his expertise, and we needed him fully invested in the company to get us to that next level. So we were so young in the company, but given that we hadn't invested that much cash ourselves, we needed to take that into account. There was no science to it, I will tell you, Ryan. We just negotiated a number that both of us could live with.
Isn't that crazy? So, did you have help with that negotiation? Because I've heard that story, from a lot of people that are in the startup world, and it just kind of comes down to negotiation and percentages, what you're comfortable with, huh?
Yeah, it comes under what you're comfortable with and the value of what you're getting. So, with my partner and I, we didn't have the ability. I mean, we were a fish out of water. Right. And going and working with these angel investors and getting underwriters and dealing with all of the legal paperwork and everything. I mean, and everything that needed to be set up to go public. So we couldn't have done it without someone like that investor.
Did you put any benchmarks or KPIs in for him that he needed to hit in order to vest or anything?
Well, those in this particular case, those key performance indicators would have meant that he had an exit strategy. Right? He was not interested in leaving his money to sit there while we slowly built the company either.
Yep.
Right.
Okay.
And he was smart. He was smart enough to understand that we had a very small window. We needed to move fast.
What was that time frame in the window?
Oh, 12 months.
Holy cow.
Not to go public, right? It took longer than that. But in 12 months, we needed to grow the business quickly enough so that, we were positioned in order to take the next step, which was the IPO. And it is primarily because of the speed at which the technology and the marketplace was changing. Right?
Well, yeah, because at that point, you get a big IBM or anybody else that can reverse engineer it, and you're immediately competing with their funds and their resources.
Yes, absolutely. In fact, IBM approached us about that, and they were actually looking to get us to help them build a similar system. And what I ended up doing, because that's sort of my skill, is I ended up basically they were subbing out all their business to us. So I had IBM selling on our behalf.
Got it.
That helped as well.
Yeah, I love it. So if we can go back to after you get this angel investor on board with you. Well, what is, you don't have to disclose anything that you don't feel comfortable with, but size of employees or, what was the growth rate in those 12 months and how did you deploy the capital to hit some of the numbers that you wanted to?
Well, it was interesting because a good part of that capital actually went to the IPO process. It's expensive.
Holy cow, really?
It is really expensive. We took the remainder. I'm not going to say the majority of it, but a good chunk of it. Going public is a very, very expensive process. And so the rest of it, we took and we hired salespeople, trained them up. We hired some salespeople in both Canada and the United States, even though we were officed in Canada, and building out the technology quickly. So I can't get into more specifics than that, but it was crazy fast growth. Yeah.
Wow, that is a lot of growth. So that you hit the 12 months, and then did you have from the 12 that first year of growth? What was the actual date of the IPO? And if we can kind of go back in there and say what else? What were some of the other major milestones that you were working towards once you hit the numbers you felt comfortable with?
As far as the IPO goes?
So, yeah, you got that whole year where you had the crazy fast growth. What was the next stage before you actually did the IPO? Was there other benchmarks or other things that you needed to do in order to qualify for the IPO?
Yes. And again, it's going to depend a little bit on the strategy, and things have probably changed, but you have to have a specific number of investors in your company before you can list. And so I think at the time it was 500. I can't remember the specifics, but I think we had to have 500 investors. And so, it's interesting because you don't want to pre-dilute the company. I'm getting into some specifics here.
No, I want to dive into the company.
Yeah,
the specifics.
pre-dilute the company prior to going public, and yet on the other hand, you have to have enough investors so that you're on the path to doing the filing. So as you can see, Ryan, as the CEO of a company on a path to an IPO, there are a lot of distractions beyond growing the company.
Well, yeah, like almost all of them.
Pretty much. I will tell you something else that I learned that surprised me, and this might be interesting to people who have, considered this path. And that is that what I hadn't anticipated was the stress that would be created by trying to make everyone happy. So, in my business now, currently, my job is to do the best job I can and make most people happy. But when you're running a publicly traded company, there are so many conflicting interests. And so there's always somebody mad at you. There's always somebody
I believe that.
doing a good job. There's always somebody who thinks the decision you make are not serving them.
Mm-hmm.
Okay, it might not be. And the other thing I think about going public, this was a nuance that I hadn't recognized. I'd heard about it, but I hadn't recognized it. And that was that when you're the CEO of a publicly held company, you have a fiduciary duty, a legal duty, to protect the best interests of the company. Now, what people think that means is the best interests of the shareholders, but it doesn't. Because what's in the best interest of the company could be very different than what's in the best interest of the shareholders. You can see where the conflicts arise.
Oh, yeah, you're like one of those Stretch Armstrong action figures trying to get ripped in both directions.
I am night staring at the ceiling, wondering what to do.
Well, yes. So I know you got some interesting insight on what it's like to go after, but I want to go back and as you're kind of going through this process, because mm-hmm. 500 investors is a lot that you have to find. So what were some of the main things that you had to do prior to going public? If you kind of walk us through that process, and maybe even before you do that, I'm just kind of curious, Cathy, why did you guys decide to go public instead of potentially ramping up your infrastructure and technology and selling to IBM instead? So maybe two questions. Let's go into mm-hmm. why IPO versus strategic buy, and then we can kind of get into the process.
Well, there's two primary reasons why we chose going public. And, there's no right or wrong decision here. But at the time, because it was internet services and the internet was relatively new, it was really difficult for us to raise private financing, based on an exit strategy that would include us selling to someone else. At that point, it was challenging.
What was the year that this was happening?
It'd be about 12 years ago now.
Okay.
Exactly, but it'd be about 12 years ago now. So quite a while, and there's a little recovery period for me afterwards, but so at that point, the exit strategy that was most desirable by the initial investors that we brought in, the seed investors, was an IPO exit strategy.
Okay.
Right. And again, we needed to raise money quickly. Very, very quickly. And besides, it sounded like a great thing to do. I mean, it really did, right? And in many ways, it is a great thing to do. But it's, like I said, it's highly risky and it's very stressful. But that was the main thing. We didn't see a whole lot of people out there who would potentially stand up to buy an internet company at that point.
Got it. Yep.
Today, sure.
Yeah. So what was now that you got the investor in and you're spending a lot of money in that process, where mm-hmm. was the money? I mean, I'm assuming the attorney's got a good chunk of that.
Oh, yes.
Mm-hmm. What were some of the main key things that you had to do in order to get ready? So 500 investors. What are some of the other staples that you had to accomplish, or the rocks?
Well, we really had to continue to build our client list. Right? The longer our client list of gold-plated clients, the easier this whole process was going to be. We needed to build out our sales team. That was really important. But the whole IPO process, I mean, you're right. The lawyers take a very large chunk of that. There's a lot of filings that have to be done. You have to have the prospectus written. And that's not an easy process, right? Mm-hmm. We had to have all of our books audited, right? Bring in a CFO, which we never had before. So, yeah. Lots of things.
Were there any epiphanies that you had as you were getting it ready for an IPO? Because you're building it to sell it. And I think that a lot of mm-hmm. the challenge that a lot of the private market has is they don't have to have that kind of pressure. So as you're writing the prospectus and building all these, the sales team, the client list, all these different things, you're building value for the actual public offering. Was there anything
yes.
that you kind of had an aha for, like, oh, I didn't realize that we had to do this to actually make a valuable company?
We had to do this to make a valuable company. I can't think of anything off the top of my head, right? I mean, certainly the accounting overhead was bigger than I thought it should be, but it was all necessary for that IPO process. So, that was one thing, just the accounting overhead and the legal overhead, that could have been all stripped away if we were not on an IPO path, right?
Yeah.
Which would have left more profit. I think, that's an important thing. But also, and this became, we sort of had inklings of this as we were going through the IPO process, but this chicken came home to roost not too long after we went public. And that is this saying, right? He who has the most money wins. Hands down, every time. So while my business partner and I held a majority of the stock, right, you would think that would give us the level of control and comfort that we needed, but we didn't have the most money. So, without getting into a bunch of stories and everything,
I want to hear one. So there's one that explain one scenario. You don't have to name any names or any that, details that are uncomfortable, but what is you're thinking, I'm sure you've got one in your head where, what kind of scenario is it that happens where that really, really comes to fruition?
Well, with a publicly traded company, the president and the CEO has a lot of control over the day-to-day function of the business, but it is the board of directors that run the company, right? And so when you have people who are on the board of directors who have got a lot of financial wherewithal and a lot of financial clout, they can very quickly determine the flavor, if you will, and the direction of the board. Maybe you can hear what I'm sort of not saying here.
Yeah. No, I get it. Well, because you got the board of directors, then you got your investors, all of them, and then you got your company. Yes. I mean, that's a challenging dynamic to dance in.
It is a challenging dynamic. It is, and like I said, I was ill prepared for that. I will tell you, I was ill because in my world, we build a product, we improve it, we make it the best we can, we sell it, we make our customers happy. If our customers aren't happy, we bend over backwards to make them happy. We hire great employees, we do what we can to motivate and inspire them and make them happy. But when you're dealing with a publicly traded company, there are so many conflicting interests. You just have to figure out how to let some of that go and grow a very thick skin very quickly.
I mean, what kind of resources or who did you go to as you're learning the stuff that you said you were ill prepared for?
Well, in our particular case, we were very lucky because we had corporate legal counsel who was very, very skilled at the IPO process, and really took us under their wings and went, we're not going to let you fail. We're not going to let you fail here. And there were a few times when. So a few shortcuts were suggested, a few things that would have been less expensive for us, and our lawyers just basically put their foot down and said, you're not going that path. You'll get hurt in the long run. So I think, that was one of the things that was really important. So the initial investors whose job it was to help us raise more money to go public and get those 500 shareholders in place, right, was all very important. And then really, really, really strong legal counsel.
So what happened? So after you rang that bell, what were your emotions as you were going through that?
Oh, that's an interesting question. At the time, this is going to sound kind of awful, but my father was dying of cancer, and he was actually in ICU at the time. So I'm trying to deal with taking this company through an IPO and that as well. And he was in ICU. We rang the bell. So we rang the bell in the morning. I'm on the West Coast, so it was like 6 a.m. and immediately just dashed off to the hospital. Life kind of went on. It was a very short-lived celebration, but it was a celebration. It was fantastic, and it was kind of one of those where you hope everything goes well from here on in, but no matter what, you've arrived. You've completed what many people try and had not succeeded at. So it was a real huge badge of honor for sure.
Did you feel some sort of closure?
Yes and no, because now we're publicly listed, but I also knew now we were public. And you've got to think about it. The word public means you're public. Everything you do is public. And that, I found that rather disconcerting, quite honestly. So it was mixed emotions. It was, yay, we've done that. It's completed. No one can say we didn't go public. Now what we have to do is make sure we're not delisted by 2:00 this afternoon. So it was just from one thing to one emotion to the next.
Totally.
Yeah.
So what was the day-to-day like now that you were public? Did your duties change? Did your role change unexpectedly? And then how long did you stay a part of the operations?
The duties changed quite significantly through the IPO process and after that, because a big part of my job was handling public perception, making sure that we were, disclosing information in a timely manner, when we needed to, what we needed to disclose. I mean, it's not, these choices were not mine anymore. Again, we had this duty. And so that changed things a lot. And it was interesting also, Ryan, because I felt the responsibility of being a CEO of a publicly traded company very deeply. Not everyone shared that sense of responsibility. So sometimes I had employees that had kind of gone a little bit offside, and I'd have to have a discussion with them and say, hey, we're public. I'll give you an example. There's a funny example. April Fool's Day. So a couple of our technicians decided they were going to mess with our website, and they put up a fake website, because they could do it. So they just literally switched out our website with something that was totally funny and fake.
Oh my gosh.
I'm like, you guys, come into my office. We have to talk, right?
Yeah.
We are a publicly traded company. We cannot do things like this. So that's just a funny example. There were some that were a little bit more extreme, but yeah, it changed. It changed quite significantly.
Did your culture change along with that?
Not so much. I think at the top it certainly did. It had to. We needed to grow up. Be serious pretty quickly. And we were dealing with people's money, and a lot of our friends and family were invested in our company. And, so we took that seriously, but still on a day-to-day, when you run a high-tech business, people need to have fun doing what they're doing, and it was an exciting time, and the excitement was infectious. So, yeah.
Did you get the money that you needed to after you? So, like, what are some of the financial benchmarks that are now public that you can disclose? I mean, how fast did you raise the money, and was it enough to accomplish the vision that you and your partner originally sought after?
You bring up another interesting question. I don't mean to seem coy, right? But I also want to explain this in a way that would be of most help to people.
Mm-hmm.
And one of the things, this was a surprise to me again. One of the things in going public, I mean, we got, a good chunk of cash. And when you have people who are involved in, what's the word I'm looking for? They're basically involved in raising capital for private companies or for publicly traded companies. They get paid when you raise money. So if you're well cashed up, then they're not really seeing an opportunity. And so there was a lot of pressure on myself and the executive team to spend the money that we wanted to finance growth over the next 2 to 4 years. But they were looking for us to have a much more aggressive plan. And so we were at loggerheads for sure. So yeah, we were cashed up pretty well. But that is not always the position that some of the shareholders want you to be in, right? So
then that probably spirals into what you were saying, that the people who have the money win. So were these situations driving some of the future vision and future decisions that you felt no longer you had complete control over?
It was time for me to leave. Let me put it that way.
How long did you?
How's that?
Yeah, no, I get it. I couldn't imagine.
It was time to go.
It's interesting because, I mean, you've gone through, I mean, you're one of the first people we've talked to that have gone public, and the biggest challenge a lot of people that sell their companies have is the earnout, which when privately held companies buy other privately held companies, it's a long drawn out compensation that's tied to, so you're no longer the boss, and you went from being one of the bosses to literally having thousands of bosses, a board of directors, and a bunch of different stuff. So I couldn't imagine how your entrepreneurship perception changed.
Yeah, so I mean, it was still very entrepreneurial, but I was no longer. There were just a lot of other people, and they're very legitimate desires. I'm not belittling it by any means. Very legitimate desires to take into account, And I had said when you're swimming with sharks, take a shark with you. Well, here's another along the same metaphor: is that it became a bit of a feeding frenzy in the publicly traded markets, and our company was not immune to that. And so the other saying is that when there's blood in the water, get out of the water.
Mm-hmm.
And
Well,
so
was there anything
it was
specific that triggered you to really be done? I mean, was it an interaction, or was it just kind of an ongoing thing?
It happened over time. It wasn't an ongoing thing, but it did happen over time that, I was in particular at loggerheads with the direction that the company should take and the way that we should spend the money that we had raised. I mean, there was some specific disagreements about that. So it was, at some point, and this is true for any CEO, whether it's a private company or public company, at some point you've got to go, is my staying here good company? Is it time to put the company in different hands, different steerage, if you will? And it was not an easy decision for my business partner and I to make, and we both exited at the same time. But yeah, it was definitely the right move. And the company was eventually sold to another publicly traded company, and then it was taken private. So it's gone through a couple of iterations. It didn't implode after we left, which is good.
That's really good, because you built something that was sustainable.
Yeah.
So
I want to mention something else about that, though, that I wasn't aware of with a publicly traded company, is that you own a stock, and generally there's different types of shares and that type of thing, but exiting a publicly traded company is a very challenging thing to do. I wasn't aware of that. We hadn't thought that far ahead, quite honestly, and it was in many ways as difficult as building the company was to begin with. And most people think when you're a publicly traded company, it's just a matter of selling your shares. You just sell your shares to somebody and you're out. It's not that simple.
So what are some of the things that was actually the question I was going to ask, is literally financially, how did you divest, or did you leave the money there? Or so, like, how was it structured? How was your investment structured? Was it, were there stipulations and when and how you could literally sell the stock, and kind of walk us through that?
So it gets rather complex, okay, with the different share structures and different maturity on the options and things like that. And we had also gotten some shares in lieu of some of the time we had spent building the company that we didn't receive a salary. So it's kind of complicated. But basically, when you're trying to exit a publicly traded company, you can't just sell your stock onto the market, because you know what happens when you do that.
Mm-hmm.
You drop the value of the stock. Everybody gets hurt, including me. So when the president and CEO of the company starts selling her shares, that has to be publicly disclosed, right?
Yep.
So it's like, that's not going to work very well. It's just not. And again, we're just like, uh-oh, so now what? And, basically it required us to find investors who were going to pick up our stock, negotiate a specific price, halt the stock from trading on the exchange until obviously we had to get the Securities Commission to approve all of this beforehand, and halt the stock, transfer the shares, and then start the stock trading again the moment a press release was issued saying that we had resigned. So it was all very, very coordinated. But the problem is, and this was a big challenge for me, is that we needed to do it legally on the up and up, which we did, but we also couldn't discuss it with a lot of people because we were a publicly traded company.
Yeah,
right?
Crazy. Yep.
Which meant that my staff, who had stuck by me from the very beginning, didn't know a single thing about what was going on until the stock was halted. My partner and I walked into the boardroom with all our staff there and announced that we had resigned. One of the worst days of my life, I will tell you that.
How come?
Because the sense of betrayal in the room was unbelievable, because they never saw it coming. And, they couldn't. That was part of my responsibility as the CEO of a publicly traded company, right, is to make sure that information is released at a time that serves all of the shareholders. There needs to be a fair playing field. So,
did you feel the same way walking in there? Did you feel guilt? Like you were going to be betraying them?
Yes, and I knew I wasn't, but I knew that I couldn't explain to them the situation either, right? It's like, well, we could explain to them afterwards. It's like we couldn't disclose what was going on until the stock was halted.
So
right, to protect all the shareholders. So
how did you overcome the feeling that the people had?
I think just a matter of waiting for the shock to wear off, and that they knew, that my heart was in the right place, right? That they knew that I was just handling very carefully my responsibility to the people who had invested in our company.
It's interesting because that experience in the private world, it's up to the discretion of the business owner, and you hear some horror stories about how they tell people before they shouldn't. Right? I mean, there's a lot of gray area in when and how to tell employees and all that stuff. I mean, did you feel a little bit of assurance in the fact that there was like specific rules and a game plan of how you had to handle it?
Yes, that was really helpful. The challenge is you need to understand what they are, right? I mean, it was really, really, really easy to make a misstep and not even know you had done that. So the only solution to that is to basically keep your securities lawyer in your pocket, keep him on speed dial, and check everything with him before you do anything, because it's a minefield. And not only would it hurt me, had I, just even inadvertently done something, but it would have been harmful to the company, to the shareholders, to the staff, right? So yeah, it was. I felt like I was walking on eggshells a lot. Yeah. Was there
an opportunity or a thought in your mind to keep your investment there, but just resign?
No.
It was just it was totally like one and the same thing.
Yes. And not that I didn't think there was a good opportunity in the business, right? But I'm an entrepreneur, and I was just not going to just retire and hope that my investment in this thing that I had built and left was going to be successful. I mean, I really wanted to go and do other things. So,
that's a good segue into life after. And so as we kind of go into what you ended up doing afterwards, did you think about, did you have a plan of what you were going to do afterwards, or were you so in the weeds trying to deal with this to not think about that? So, let's take it from that day, forward. What was the plan? What were you going to be doing? And how did you deal with it?
Well, the initial thing was just to exit. I mean, honestly, didn't look much further than that, because that was a supreme challenge and incredibly stressful. But once we had accomplished that and it was over and done, then my first strategy was honestly to take some time off.
What'd you do?
I traveled for about 3 years.
Did you really? Wow.
Yeah, I did. Yeah, I just took time off, traveled. You and I were talking earlier. I love salmon fishing. Went camping, fishing. I just seriously took some time off. So I didn't have any specific plans to start another business, although I knew I would. But I just really needed to recover.
Did you have a family at this time?
No, I was married at the time. No kids or anything like that. And yeah. So.
What was the favorite place you went over those 3 years?
Oh, well, I live in British Columbia, and we have the most amazing forests and mountains, Rocky Mountains and stuff. So yeah.
Favorite place is close to home, huh? That's awesome.
Yeah, definitely. Well, and Italy. Okay.
Okay. So was there, as you're going through those 3 years, I'm always curious because I find it difficult to turn it off. And I mean, what were you reading? What were you consuming? Like, as far as the material and the things that you're surrounding yourself with, I mean, were you able to totally shut it off, or were you slowly working your mind back into it? I mean, like, kind of, I don't know if that question makes sense.
Yeah, no. One of the things that I did, especially after about the first year, the first year was just kind of decompressing from all of that. But then it was really important to me to take a look at my motivations for starting the company and taking the path of an IPO and, taking all of that on, because at the time I still think it was the smartest way for us to grow quickly, which is, we had to grow quickly or we couldn't execute our plan at all. But I really needed to take a really hard look at, what bigger picture, what was I trying to accomplish? because once I got really clear about, I mean, it all comes down to mission, right? Mission in life. And I'm an entrepreneur and I just love helping other people be successful. And many of my employees back then are either still working with me in this new iteration of the business, or, we've had great relationships. But it was important for me to say, okay, well, once I get clear about my mission, then I can build another company that supports my mission. And it's nice not to have the financial pressures that I did. And so I can build this thing differently. Does it, because I managed to, obviously do some cash up.
Yeah, that's the gentleman I interviewed last episode. He actually worded it similar, and he had this Venn diagram he was talking about where you have skill sets, passion, and money, and they all intersect. And he goes, the second act, it's nice not to have the financial pressure, so you get to love what you do that you're good at, and the money is a bonus.
Yes, but I think you also get to be more deliberate in how you and how you live each day in the business. I was very clear, Ryan, I was not about to go through a pressure cooker like that again. And it wasn't necessary. I mean, I worked very, very hard to build the company to where it was. We didn't take any money out of the company for the first 18 months or so. And even after that, it wasn't much. So we sacrificed a lot. And I sacrificed a lot of my sleepless nights. And so getting clear about my mission and having enough, cash that I could design this thing in a way that would work for me and serve more people, it's been a real gift. It's a luxury a lot of people unfortunately don't have. So,
well, and I love the fact that you're doing it very deliberately, like you said. And I'm really curious on what is your new mission. But before you even answer that, what is the things that you did to come to that new conclusion? Was there great resources that you went and explored? Was there people you talked to? But how did you actually go about doing that? And then what is it today?
I took a couple of personal development courses, right? They were retreats, workshops, if you will, to get really clear about my personal mission. This is going to sound kind of woo-woo, but
no, it's not. It's perfect.
My reason for being here on Earth. I think all of us have a specific mission. It's up to each of us to uncover it. And for me, it comes down to really being in a place of being what I call a catalyst for growth, right? A catalyst for growth. And so that means that I have a opportunity, a mission, calling, even a responsibility to create opportunities for people to move forward. And how I do that is in the arena of small business growth. That's where I've chosen. It could be in a number of different places. So I have this calling, this responsibility, this pleasure to put myself in a place where I can assist people to grow their small businesses. Now, I discovered that it's really important to me to contribute to the prosperity of the world. Like that's sort of my place in this fabric, if you will. And prosperity means more than money. It means a lot of other things in addition to money.
What does it mean to you?
It means freedom. It means flexibility. It means freedom of choice. It means self-determination. But a lot of those things are really difficult to do without money. So money's in there for sure.
I think you very well said, because it is so difficult to have this recalibration after the financial win has been made. I think there's now this introspective journey that people have to go on, and it's very difficult for a lot of people because you're no longer being measured by balance sheets and quarterly reports. You're having to go, what's it all for?
Yes. Exactly. And I think that's the same reason why, they'll tell you stories about when people retire. They die shortly after. They get very sick shortly after. And I think it's because those people, my guess is, they haven't really, because they've been busy with their careers, but they haven't really stepped back and go, why? Why this? And I believe that business is a game. It's just one of the many games we play as human beings. We play the game of wife, or we play the game of daughter, or we play the game of, politician, or whatever it happens to be. And it should be fun. Games are supposed to be fun, right?
Yep.
Sometimes we win, sometimes we lose. But unless we have a real strong internal sense of why we're playing the game, if the game is over, it's difficult for us to know where to go next. And I think that's where.
So was that those development things that helped you find your why, or was there, or did it just take time, or?
No, I think I think anytime with anything that we're not really skilled in, and I wasn't really skilled in that, getting help makes sense.
Mm-hmm.
Right? So yeah, these were programs designed for that, and I immersed myself in them. I'm like, okay, I want to know, I want to make good choices. I have the luxury of time to kind of figure some of this out, and I want a strong sense of fulfillment. Who doesn't?
No, I know it's the fulfillment and enjoying it is what's the whole point, right? I mean, I've had conversations with people. They literally just work 60 to 80 hours a week. All they do is, I mean, Warren Buffett did it for 70 years before he started giving back to charity nonprofits. Because all he measured himself was on the valuation of his net worth, and you can't take that with you. And I'm just if you've got something, and you've said a lot of amazing gold nuggets here, Cathy. But if there's, with the blessing of hindsight biased and being able to look at this and maybe speaking to someone that's still hasn't had their ability to exit, how do you balance all this, and how would you go about, if you were to go to do it again, interjecting your why into a situation where you've got the business and you're still kind of grinding away like that?
Well, so you're asking me what sort of nugget?
Yeah, well, it's you don't have to come up with anything. Yeah, and it's like if you were to be talking to yourself when you're in the thick of it with the IPO, when you're not necessarily as in tune with that why, how would you have helped yourself figure that out while you're in the middle of all that?
I think that well, I would have invested some time. Right? I mean, we can always carve out, it's important to carve out some time, invest a little money, get some help or whatever to figure that out. But I think it's also really important to recognize that, if you approach small business as a game, there are many different ways and many different types of games that you could play. So continuing the metaphor, it could be baseball, it could be football, it could be hockey, which is a great Canadian sport. Love that. But so you can be that person. You can have that mission, that drive. You can excel in whichever one of those games you choose. The problem becomes when you start to switch games looking for it, and you can't find it. So that comes across as lack of focus, lack of tenacity and perseverance. So the trick is, I think, in the game that you have chosen, how do you understand your mission and live it to its fullest within the game and stay focused? And so I think for a lot of people, I think that lack of clarity and understanding causes them to do a couple of things. And one is to continue to switch focus or try to buy their way out of a problem. We see it a lot with serial entrepreneurs. And so, getting that clarity and just playing the game you're in really, really well and being tenacious and persistent. I mean, if I could stamp anything on my forehead, that's what they'd probably stamp. She was tenacious. And enjoy the process.
Enjoy the game.
The grass is not greener on the other side.
Well, and I think, you nailed it. But that game usually has an end, right? So knowing where that game and the end fit into your whole picture makes that game even more focused, I would assume. Yeah,
definitely. Having an exit strategy in any business that I've been in, whether I planned on executing it or not, I don't have a crystal ball. I like to think that I'm going to be in this business for the next 20 years. That might change tomorrow. So I just want to set it up so I have choice.
Choices and freedom, right? Well, as we're kind of wrapping up here, explain to the listeners what it is that you do now.
Well, I'll give you a couple of things. One is it's fairly recent, so don't judge it too harshly, but I've just launched businesssuccess.com. Awesome domain name. There's a website there. We're getting that going. I have big plans for that particular business, but I am just, the businesssuccess.com seems bigger than me right now, but I'll grow into it. Like I said, I have a big mission for it. And there you will also find businesssuccess.com/cafe is a weekly interview series that I've been running now for over 4 years. So I've done over 200 episodes, and it's called the Business Success Cafe. It's 20 minutes of education each week, and I call it the perfect coffee break for business owners. So I'd love to have people come and join us there.
I love it, and I'll put all that stuff in the show notes. And what is the best way for our listeners to get in touch with you?
Best way is to go to that site, businesssuccess.com, and all the information is there.
I love it. Cathy, thank you so much for coming on the show.
thank you, Ryan. I appreciate it. You asked some really tough questions, so it's good.
Well, I enjoyed it very much. Thanks.
Okay, you're welcome. Thank you, Ryan. Bye-bye.